The interest in Bitcoin, the interest in cryptocurrency is going down. There are less and less search queries, and with it, the price is following. Now, the question is, can there be a recovery? Does it make sense to buy those bottoms? Or was this potentially already the cycle top? In this video, we're going to look at data most people aren't considering. We're trying to figure out where we are in the grand scheme of things. Now, have a look at the following. This is Google Trends, and it shows us the search interest of Bitcoin over time over the last 5 years. There's some correlation between prices and search interest. For example, the recent peak in search interest happened in the week of the 10th to the 16th of November, and the price at that time was at 90K. Since then, we have come sideways in the price. We only slightly went up. Now, the search interest for crypto is slightly different, right? So this is Bitcoin, this is crypto. Crypto tends to stay elevated for a bit longer. And to a degree, this might be people that considered first buying Bitcoin, then saw Bitcoin's high price, and then are wondering what are potential cryptocurrencies that are not yet that high that might have more upside potential. The issue, of course, is that with more upside potential also comes more risk. And so even if you look at the last 5 years, historically, we are still at 50% of peak search volume for crypto. Now, the market cap of total 3, so of the cryptocurrencies that are not in the top 10, is actually not growing that well in the last few months. We have peaked at very similar levels to November of 2021. Since that peak, we actually went slightly down. Bitcoin, on the other hand, in the same time period, went up by 43%. Really, the altcoins are much more risky than Bitcoin, right? There are more and more altcoins that get created every single day, but the market cap of the altcoins as a whole does not necessarily outperform the market cap of Bitcoin long term. From December 2017 to today, Bitcoin made a roughly 5x, right? From 20K to 100K. The altcoin market cap during the same time period made only a bit less than a 3x. And that is now not taking into consideration that the old altcoins might be underperforming and all the new coins, they now get all the attention. And so really, I do not think that it's a good idea to hold altcoins over the long term, to buy, say, 10 or 20 altcoins and hoping for those alts to outperform Bitcoin. That kind of a strategy is likely going to underperform. A better strategy is to use altcoins just short term for trading, and ideally to do that during altcoin season. Now, when does altcoin season happen? When do altcoins in general outperform Bitcoin? There are different ways to estimate this. One potential estimator, which I like very much, is the Bitcoin dominance. So this looks at how much of all of crypto is currently in Bitcoin. And when that's historically at very high levels, so above 70%, that's the potential time when Bitcoin dominance can crash, or in other words, when the altcoins can outperform BTC. Currently, we're not at 70, but at 61%. And it seems like the movements are slowing down somewhat. So maybe we've got another year, potentially even 2, until we hit 70%, until we see the real altcoin rally. There's also another way to look at this, right? We can look at this total 3 metric, right? The market cap of all of altcoins except the top 10. And we can put this in relationship with the market cap of Bitcoin. That's the resulting chart. And again, we get a very nice trading range. I looked at this chart 2 years ago already, and the prediction at the time turned out to be somewhat accurate. But yeah, this is hovering also in a relatively constant range, and the bottom to the top is a roughly 3x return. Or in other words, when you buy the top, you sell the bottom, you lose relative to Bitcoin 75%. And so the altcoin bleeding can take quite a while. If we take the prior movement and just overlay this with the current cycle, we would take until November of this year to hit the bottom. Now, there is, of course, a lot of volatility in this chart, but it shows us what potential ranges are, and it shows us also that it does not make sense to have now 80 or 90% of a crypto portfolio in altcoins, right? It makes sense to still be mainly in Bitcoin because Bitcoin tends to outperform altcoins most of the time. And there are just very short moments in time where the altcoins outperform Bitcoin massively, but those pass also very quickly. Because when we look at those prior altcoin rallies, right, they only lasted 2 months over here or 4 months over here. And they always started when Bitcoin was already massively dominant. and we aren't there yet. Yes, doing some smart plays here and there. Let's say when we track an influencer wallet and we know that this influencer is going to talk about an altcoin, buying those kind of alts for the short period of time might make sense. But if we're now holding altcoins long term, it might make sense to rather bet on relative valuation shorts. So to bet on the altcoins doing worse compared to Bitcoin. The overarching trend is clear, and it started in November of 2022. Now, when we zoom out further, like beyond this year, right, when we look at the next 2, 3, 4, 5 years, then there are, of course, forces that are way more important. Especially for Bitcoin, the long-term tokenomics are very, very bullish. Have a look at this graph here. This is the weekly return of Bitcoin relative to the Bitcoin ETF flows. And there seems to be some kind of a correlation, right? Those kind of data points do align quite nicely. When there are a lot of ETF inflows, we tend to also see positive Bitcoin returns. When there are ETF outflows, we tend to see Bitcoin price declines. And yes, on a day-to-day time frame, this is fluctuating. And yes, there's only 5.9% of all of Bitcoin supply that's held by the ETFs. However, when we just look at the last 14 days, the Bitcoin ETFs bought up annualized 3.3% of the supply. And that's to be taken in relationship with Bitcoin's mining, which is only 0.8%. So there is more Bitcoin that gets bought up through the ETF than is mined. And so just based on those two metrics, Bitcoin supply gets smaller and smaller. Thus, it should outperform the ever-expanding fiat currency base. US M2, the US money supply, grows by roughly 6.8% per annum. Now the question is, of course, how sustainable is that Bitcoin ETF demand? Have a look at those charts. This is how much Bitcoin is held by the ETFs over time. The chart starts in January of 2024, and the number of Bitcoin that get bought up through the ETF continues to grow. There aren't that many periods in time where this balance is going down. I believe that this chart is likely going to continue to increase. Now in the middle, we don't count just the number of Bitcoin, but we count how much percent of Bitcoin supply is held through the ETFs. So that's a bit under 6% right now. And on the right side, we see this measured in US dollars. And of course, in US dollars, this is fluctuating more because the Bitcoin price is going up and down regularly. Now, there's another very important effect. Besides the Bitcoin ETF buying up more than gets mined over time, we also have more and more Bitcoin that gets lost or that simply gets held by the long-term holders that are never going to sell. When there are holders that never sell their Bitcoin, that also means that the liquid supply is shrinking over time. Check out this chart. This is the percent of Bitcoin that hasn't been moved for the last 5 years. It continues to increase over time. It increases pretty much constantly. There are rarely points in time where this balance is going down. So there's only roughly 70% of Bitcoin that's still liquid, that has moved in the last 5 years. And this tends to shrink more. So we've got the 30% held by those long-term holders. We've got the 6% held by the Bitcoin ETFs. And maybe in 2 or 3 years, both of those cohorts, long-term holders plus ETFs, might hold more than half of the supply. Now, once we add the wallets that have moved their Bitcoin in the last 3 to 5 years, we do see some cyclicality, as in when the price is going absolutely parabolic, when it moves from $200 to $20,000, then some of those holders did take advantage of those elevated prices. But we didn't see that selling anymore subsequently. So none of the subsequent rallies were strong enough to, in aggregate, get the wallets between 3 to 5 years to sell. So that is already close to 50%, at least if you also add the ETFs. And so there's a leverage effect, of course. For every dollar that gets into Bitcoin, the market cap of Bitcoin increases by more than $1 because of all of that illiquid supply. Now, here is a controversial take. I believe for the Bitcoin price to continue rising from one height to the next over the cycles, we do need the crashes. People say that the high volatility of Bitcoin scares people away, and that's why it's not being adopted by so many institutional investors, etc. But I actually think that the volatility is a feature, not a bug. Because whenever Bitcoin's price is crashing, or when crypto in general is crashing, this brings in new people. They see an opportunity. When the crash of COVID-19 Bitcoin hit the stock market, that was the point in time where most new brokerage accounts got opened. When we see Bitcoin crashing, we see how the small holders buy the dip. Have a look at this. This shows how the fish and the shrimps, so the small wallets in Bitcoin, how they buy and sell. And of course, some retail investors get excited by rising prices and buy during rallies, but it seems like after that crash in 2018, retail became a bit smarter. Retail took profit when Bitcoin hit its 60 to 70k, and they bought massively during the Terra Luna and the FTX collapse. Retail bought the 16k dip, and they sold quite heavily at 70k and also recently at 100k. But just have a look at the magnitude of those waves, right? The buying is much stronger than the selling. In other words, for retail to buy more Bitcoin, we need to see the price coming down sometimes. Retail isn't interested in buying Bitcoin at 100k. Retail is interested in buying Bitcoin after a 60 or 70% price drop. And again, long term, those price drops create adoption, and the profit taking is smaller than the purchases. So this is a net inflow over the cycles. Now the issue is always, when do we see such a depression again? When does it make sense to buy that aggressively? The one metric is the realized price, right? It's the average cost basis of the market. When Bitcoin hovered at 20 to 16k, the price was below the realized price. Currently, that level is at 43k roughly. So whenever we fall below 43k, with the tendency of that price, of course, going up over time, we have a historical buying opportunity. There's another very useful indicator, that's the MVRV Z-score. So this looks at how much is the market in aggregate in profit relative to the volatility. And we aren't at super high levels compared to the beginning of 2021 when Bitcoin was at 60k. But we don't have to be in order to see a retracement in Bitcoin's price. The secondary top that we had at 69k did not correspond with a super high MVRV score. We were only at 3.5 roughly. Very similar to what we saw with the 100k mark in BTC. And subsequently, right, we went down. We went down by 70% in the Bitcoin price. So from 69 to 16k. Of course, things look very bullish now and doesn't seem like the Bitcoin price would suddenly drop that much. But that's the nature of the market, right? Whenever prices are very high, then everything looks great. Whenever prices are very low, then everything looks super doomed. Then FTX is imploding and Terra Luna is imploding and everybody calls Bitcoin a scam.
Here's the thing. The market isn't expanding as quickly anymore as it used to, right? With the Trump push, now the question is what can come that's even larger than that pushes prices even higher. And because of that, because it's more and more player versus player, even though the market in aggregate might be somewhat balanced, it's still just a few assets that outperform everything. Have a look at this picture. The tokens that are between 101 and 200 in terms of market cap, they in the last month went pretty much plus minus zero, right? They gained slightly. But when we look at this picture here, that's just because there are a few massive outliers. And the question really is, when we look at 100 tokens, how likely is it that we are going to pick Toshi or the Swift coin or AIC? Especially when we hold a diversified portfolio and we have, say, 5 or 10 altcoins, the likelihood is pretty high that that altcoin portfolio is going to underperform. Because if you held AI16Z and you made a minus 76% loss, or you held Turbo and you lost 40%, or you held Mockcoin or Mu and you're down more than 30%, it's very hard to still have positive performance. And I'm a fan of trying to get the odds in our favor, right? It's possible to pick the winners if we are very early and if we adopt something like Trump in the earliest hours and if you are one of the top traders, that is possible. But if you don't have time to watch the crypto markets 24/7, or if you're not based in Asia, then it's very, very hard to get those winners all the time. And so why not go the easy route? Why not simply bet on falling prices? If most altcoins do worse than Bitcoin most of the time, and if there's just a few assets that outperform that massively, then we can just pick a random asset over here and we are very likely going to make money in the next month. We just have to make sure that we don't fall for those few tokens that are discussed everywhere. When we bet on falling prices of Chiliz or of Safe or of DYDX, and that's a comparatively safe bet. It's definitely still risky because this is the crypto market and the crypto market does get manipulated, but it's less risky than trying to find the needle in the haystack. And there are some tokens that underperform more consistently than others. For example, this one over here, Balancer. I started shorting Balancer in the middle of 2022. I went on and off about that position. Sometimes I was short, sometimes I was out of the market taking profit. But since that point in time, Balancer underperformed Ethereum by more than 80%. So it's not just that most altcoins do worse than Bitcoin. It's also that some of those altcoins underperform most of the time. And so I've made several videos on this topic. It's a comparatively advanced topic because it's also easy to get burnt with shorts. That's why most retail investors don't get involved in this. But there are premium tutorials how to win in bear markets by shorting altcoins. It's 42 minutes in length. Then there's another video gaining from relative valuations. Then there's another one shorting optimism relative to Bitcoin. This has been published quite a while ago. This, by the way, is now optimism relative to Bitcoin. So this was a good position. And the reason why most altcoins do worse than Bitcoin is tokenomics, as in more and more tokens get issued over time. And if the demand cannot keep up with the token issuance, then the price has to underperform the rest. Now, this is not a good strategy during a massive bull run, but it is a good strategy during a bear market, of course, but also during sideways movement. Because again, even during a sideways movement, money flows just into a very few basket of altcoins. Most alts do worse. And so this is all part of the premium membership of this channel. Premium is not just about shorting, it's also about on-chain analytics. It's also about portfolio management and risk mitigation. There's more than 100 tutorial videos in total in premium. Now, this is not a topic to make a 10x next week, but it is a topic to outperform steadily and slowly. And if you can only outperform, say, by 30 percentage points per year, and Bitcoin itself already grows by 30% per year, which I believe is somewhat of a conservative bet. Then if we do this over 4 years, and again, we don't have to trade very actively, we can 8x our capital. Now, if you have just a few $100s of invest, then an 8x within 4 years doesn't really sound that great. And then by all means, feel free to gamble with that money, right? Because you can also recoup the money very quickly just by working more, just by saving more. But if you've got already several years of your income saved up, or if you've got $10,000, $50,000, if you have more money, then an 8x does matter, right? 10K becomes 80K in a relatively okay-ish time period. And so I actually find it easier to make money in bear markets and during times like this. Again, because we don't have to pick the winners. We can simply have a diversified portfolio of short positions. Again, because most altcoins underperform Bitcoin most of the time. If you own a lot of altcoins and you hold them over 10 years, you're probably not going to do that well. Because have a look at the top tokens 10 years ago. How many of them do you really recognize? Paycoin, BitShares, MadeSafeCoin, NXT. Yes, Stellar is still around, Dogecoin is still around, but where is Peercoin, Counterparty? Dash also underperformed Bitcoin quite a lot, so did Namecoin. So really, the crypto markets are not venture capital markets, right? The crypto markets are very much player versus player, and it's better to simply bet on the vast majority doing worse most of the time. Not in a bull market, but most of the time. And I believe currently this does apply. Currently we are in most of the times. The crypto valuations are comparatively high. A lot of people made profit and took profit at 100K. And so if your portfolio is large enough, it's not just a few $100s, but it's maybe in the $10,000 and above, then feel free to check out the premium membership. It's currently $165 per month. There's also a 1-week money back guarantee. So in case you don't like premium, simply message me within the first week and I'll refund you 100%. There's really zero risk for you. If it's the first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you in the next video or see you in premium. Cheers.